Hey, Kyle, really good to see you. Today, we have an important topic for everybody, I feel like how to turn your stock losses into tax gains. The past few months have been so tricky for investors, everything from stocks to bonds, they're falling, and it's hard to know whether we should stick it out or cut our losses. I know that you can sell at a loss. It's often called a capital loss or a tax loss. How do savvy investors use that to their benefit?
Hi, Erin. Yeah, absolutely. This is something I think that we forgot about for a little while. We were on a bull run there ever since
Yeah.
COVID hit, for a bit. But essentially, you can sell, like you said, positions in your account at a loss, right? And that may reduce or eliminate your tax bill down the line. It depends on obviously how much of a loss we're talking about in each of the positions.
Hmm.
But you can absolutely do that in your account. You don't like to sell at a loss typically, but sometimes timing permits some creative planning here.
Especially when we can combine it with the capital gains.
Yeah, exactly. And this is a strategy that we've used in the past in select occasions, of course. But we've met some clients that have, they've built up a very large position, maybe in one or two names, like one or two stock names, and they'd
Hmm.
worked with a broker a long time ago, and something like Oracle or Microsoft or Home Depot, and all of a sudden, you've made all of this money, but you don't want to sell because you have to pay taxes on all the
Right.
gains, right?
Hmm.
And so times like this may be an opportunity to trim back your exposure in individual names like that and start to rebuild a balanced portfolio for yourself.
Hmm. Hmm. All right, good insights there. So, what kinds of investments can people sell then to claim that loss?
So, a really important distinction here is that this doesn't work in IRAs, right? It
Mm.
doesn't work in a tax deferred account or a Roth IRA. This has to be in a non qualified account, right? So, an individual account or a joint account where you pay taxes every time you essentially buy or sell positions. But this works with every type of position that you hold in an account like that. So stocks, bonds, mutual funds, ETFs, REITs. It's essentially almost all of those positions are tracked in a very similar
Mhm.
way.
Mhm. Now, I do want to ask specifically about crypto because, for example, the value of Bitcoin has just plunged recently.
Right. Crypto does fall under this umbrella, right?
Mm.
So it's very similar the way that works. So if you've had to file your taxes in the last year, crypto is required, you're required to file and disclose your crypto positions. So whatever vendor you're using for that, if it's something like a Coinbase or something like that, they'll usually provide you with the framework for filing for the your taxes with the crypto filing, right?
Mhm.
But one thing that to keep in mind with the crypto is that a lot of people bought these crypto names as a lottery ticket. You know what I mean? It's the potential to invest just a little bit, and I may strike gold with one of these weird altcoins. And if you find yourself still holding on to these random coins that were your lottery tickets, now is not a bad time to sell those and take advantage of those losses because you can carry those things forward for a couple years even.
Mhm. Mhm.
And it's also a good time to reevaluate that crypto position, right? Again, a lot of people looked at it as a lottery ticket, but you and I have had this conversation a few times. We
Right.
need to look at this as an asset class.
Right.
And if you can justify it as an asset class, I mean, now's as good a time as any to reposition in the space.
Yeah, I like it when we can take advantage of those losses. Takes the sting out a little bit. Is there
Right.
any timeline that we should be aware of? I mean, is there a good time to take a tax loss?
So, like we said, picking the bottom of a market is usually a losing game, right? It's very difficult to do that efficiently. But now is a time where almost across the board asset values are depressed, right? There's not a whole lot of winners anywhere out there. So timing wise, it's not a horrible time to potentially do that if it makes sense. Again, across the board, maybe to offset some gains in some positions like we talked about earlier. But one thing that you really need to keep in mind is the wash sale rule, right? So if you've got big losses in Netflix, for example, for the year, you don't want to sell Netflix today and then go and buy it again tomorrow because the IRS is going to count that as what's called a wash sale, right? Anything that is substantially identical to what you've just sold, you need to give it about a 30-day, a little cool off period before you go and repurchase the same type of asset. So you may
Mhm.
want to work with a tax advisor if you have a very complex portfolio and you got a lot of overlap in your funds and things like that are in the account. But just be careful. It sounds too good to be true, right? So it probably is. So give it some
Right.
time.
Yeah. No, I like this, Kyle, because in theory, it's simple, right? Combine gains with losses to reduce your tax bill. But when you dig a little deeper, it certainly is complicated. And that's why it's important to speak with a professional about it. So, Kyle, if somebody has questions, what's the best way to get a hold of you?
Best way to get in touch with us is through our website. That's firstcoastfinancialgroup.com.
All right. Kyle, thank you very much.
Thanks, Erin.